TradFi markets are closed today, but we got some important data points, and they came in under expectation for the most part, which you would think means that, hey, the markets are going to dump. But so far, crypto is not telling us that story. We're going to get into all of that and more today. As we get going, please hit that like button, subscribe to our channel, drop a comment, and remember, nothing we say is financial advice. We are a couple of guys who love following the markets, nerd out on this stuff, set an early alarm to check Bloomberg so we can watch all of it unfold. But we are not financial advisors. Do your own research when it comes to any buying and selling decisions. Kev, the numbers are in on unemployment. 236,000 jobs were added in March, which was slightly over the expectation of 230,000. The unemployment number percentage went down again. Now it's at 3.5%. It's just like we are stuck. The Fed has lost the battle against unemployment, it seems like. How are you feeling about everything that's happened so far today?
It's a little bit of a surprise seeing that 3.5%. Definitely, I didn't believe it. I had to check it to see if Watch Your Guru was a parody account when I first saw the initial tweet. But it's real as could be. Obviously, it's not for the macro. Obviously, employment reading isn't necessarily the one thing that's going to kill us, but it's not something that we definitely want to see. I think if anything, like we talked about, this could be like a false flag for a lot of people. People see this as bullish, as like, hey, people are working right now. I think it's BS. I think that we're still waiting to see inflation too, but unemployment needs to rise significantly. I'm talking like double of what it currently is, at least, to get to a point where inflation is coming down. And yeah, this just seems like we're going to be stuck in this never-ending recession if it continues to play out this way.
Happy Friday, Ace. Good to have you, as always. What people are hanging their hat on is the fact that this number, while over expectation, is down from the 472,000 jobs added in January and the 326 added in February. Now, in Q1, there were 1 million jobs added. Mm-hmm. That's a lot of jobs. The labor force participation rate, so those who have a job or are seeking employment, is also at a very high number of 62.6%. But there's still a lot of people who need jobs, and there are a lot of people who are, with these higher interest rates, are going to be in a crunch for money at some point. So I don't see that number like slowing down as many people are hoping. Like, yes, it's less than it was in the last few months, but the unemployment number is still really, really low. There was also plenty of information around wage growth, up 0.3% month over month and 4.2% year over year. Now that is down from 4.6% year over year the previous month. So people are finding areas to be positive and are trying to find where they can spin this in the direction they want to spin it. To me, just trying to look at this from a clear lens, it's still not great. We've seen the percentage shift in probability for the rate hike at the next meeting. It's up to a 2-to-1 chance of a 25 basis point hike. That wouldn't surprise me in the least bit. I think that's probably likely. We have inflation data next week, but you and I were talking before we went live that maybe this next inflation data is a fake out, and we could still continue to see the markets do well this month before the June meeting.
Yeah, I think that's the way this is playing out right now. I don't think that we're going to see massive inflation until some of that oil data came in. Obviously, we're going to wait until we get into the summer months. And we can look at a chart also going into 2008, because we always reference 2008 because that's probably the most recent recession that we have. It is the most recent recession. That's probably on the level of what we expect to be in and coming up to. But, we saw this pump go all the way up in 2008 to like May, almost June. And this was after a bounce that we saw, the dip all the way down in March. So if this plays out to the point where we're doing something similar and, we finally get some of this inflation data that shows that maybe it's a reversal where you're starting to spike, 2-3 months down the line in the summer, we could be playing very similar fractal in the charts to what played out already. So I think the narrative as of right now is, we're probably going to get, a couple of months of, quiet times, maybe a little bit more bullish, but I do think that we're extremely close to a local top. It's just when we get data like this, that's not necessarily the best in terms of immediate downturn.
Yeah, I think the way that I view it, and this will be my official call for the coming months, I think we continue to see some positive price action through April. We'll have the meeting in May on May 3rd, where they'll announce a quarter basis point hike. That's going to be priced in already. People are going to start to get comfortable because we're also going to see inflation data for March, not be too bad, because it was only last Sunday, and my kid's agreeing with me in the background. It was only last Sunday that we found the news about OPEC plus. It feels like it's been weeks, but it's less than a week. Yeah. So when we get April inflation data after the May meeting, it's going to come in hotter than expected. The unemployment data for April is also going to come in, showing a very strong labor market. Then we're going to have to start pricing in even more. And the Fed is going to be kind of like, what the fuck do we do at this point? And maybe we move closer to Buller's prediction. So that is my official take. If I'm staying long in stuff, it is going to be until right after the Fed meeting, right before we get the next round of unemployment data and inflation data. Not financial advice, not what you should necessarily do. That's just how I'm viewing the markets right now.
Yeah, I don't think that's necessarily a bad take at all. I think that's very reasonable, well thought out to the point. It's probably going to play out that way. But again, anything could happen at any point. But with timing and news that we're getting when we expect to get some of this data, that's what I probably anticipate too.
Yep. That was really everything on the data side. I mentioned stuff with CME Group. We have quite a bit of data coming out next week as well. We'll get to that on Monday. We'll do our weekly preview. TradFi markets are closed. We've seen crypto. It moved down overnight. When I woke up this morning, ETH was around 1845. When that data came out, it's just been range bound in this 1850 area for pretty much the entire day. So pretty boring overall in the crypto market, and with it being Good Friday and the exchange is closed, not a whole lot going in there. But that just means that everyone else is resting easy while we're still looking for spots to take advantage. So anything in the charts for crypto stand out to you right now as you look at them and as we head into next week?
I haven't been watching crypto too much in terms of price action because it's been super boring lately. The main one that's just keeping my interest is Bitcoin. And obviously, you and I talked a little bit about Bitcoin dominance popping up recently. And we can take a look at that real quick. But there is just a lot of stuff, I think, more on the trading side that interests me more. It makes me believe that we might see some price action because it's so boring right now. But this is just the Dow. We'll go into that later. Let's pull up Bitcoin dominance, BTC.D. And we can see that we're at 47.27 right here. Just dropped down to 47.26. We're down about 0.29%. And let me just find where we were. There we are. That's where we currently are. So we can see that we got this triple top right here. We got 1, 2, 3. We also got, a double bottom here too. So it's really interesting to see this because obviously on stochastic RSI, we are very overbought on the weekly. And again, Bitcoin dominance is pretty much just Bitcoin's market cap divided by the top 125 altcoins that follow it, and just gives you the entire market cap that it has control over. But it doesn't necessarily trade like anything else. So it's just really interesting to see. But we do see that we have a massive green candle that we got in the middle of March, and we're just kind of like topping out at this area. It's kind of interesting. If we look at the daily, we have tons of room to the upside if we want to look at this as moving potentially up, but a lot of this is going to have to coincide with Bitcoin. And ironically, Bitcoin on the daily is pretty oversold. So I'm going to pull up Bitcoin real quick, and we can see that we're oversold down here, and the volumes are absolutely dead. Like, it's kind of hard to see, but let's pull this up. Maybe not. You can kind of see how the volumes have tapered off significantly while the price has actually gone up technically. So that's a little bit of bearish divergence. It's something we want to just keep an eye on. We're at this level, this 28,809. It's been absolute resistance for us, just trading sideways on it. Do I think that we're going to break above it? I do, but we're going to have to watch and see this one based on how traders are, preparing for this next move in Bitcoin. And so I'm going to pull up CoinGlass now. CoinGlass has tons of great data for trading, and I'm going to pull up the funding rates. Yes, I want to leave. All right, there we go. So here we are. We're at CoinGlass now, and we can see that the funding rates are pretty green across the board. They're not perfect. A couple of exchanges are still positive, but we are starting to see some of those negative ones coming in. And whenever we see, negative funding, we know that there is potential for a short squeeze. Just means that there's tons of shorts opening up. And obviously, this is something that I'm going to be keeping an eye on over the weekend, looking for the exchanges where there might be. I think that there's a good opportunity if this goes completely green and we start to see really negative numbers, that we're going to see a short squeeze. So that's why I was saying a lot of this is going to depend on traders, I think, for the next move to the upside or the downside. If I look at longs versus shorts for Bitcoin over the past 24 hours, we're at 50.82% to 49.18%. More people are going short than they are going long. And we can see that, this is the narrative, different ones for different exchanges. But for the most part, this has been for 3 days now, more short than long. I would like to see more shorts open up so that would give us probably a better idea of where the next price action is going to go. It'll probably be a short squeeze to the upside. I still think that's the way. We've seen resistance at this level. But again, I think the fact that the price hasn't dropped yet after the data that came out today tells me that, the news isn't really necessarily affecting it. And this is going to be more of a trade / liquidation. And we could look at liquidation levels too right now. They're very, if I remember, 24 hours, it's 43 million in the entire crypto space. And if we look at the past 24 hours, Bitcoin's not even in the top 2. It's Doge and Ethereum. So Bitcoin's extremely sideways right now. There's low volumes, not a ton of liquidations. We expect Bitcoin to be at least in the top 2 or the top 1 when it comes to liquidations, especially when you see how high dominance still is despite, pulling back a little bit. So there's a lot of, things that are coming together, in my opinion, that seem like we're going to see a bit of a squeeze. Let's see, exchange liquidations. Yeah, some of these are still long. That's why it's 56% long on Binance for most people, 50% there. So yeah, there's definitely a little bit. We need to see more shorts open up, and I think we're getting to that point. But this could play out over the weekend and go into next week. But once we get that level where it's a good amount of shorts, I think we're going to see that pump to 30 to 33K range.
Okay, keep going. I'm trying to find the latest consumer credit data. It was supposed to come out right when the show started. So keep going. I'm going to keep looking for this.
Sounds good. Yeah, we're going to go back to, I want to look at the Dow, and we're going to look at the DXY as well. But if we look at the Dow from 2008, this is what I was kind of talking about earlier on when we were saying how maybe we rally into the summer, and then the summer we see the negative price action. And then maybe later this year is when we see the true capitulation. And, I didn't want to say that necessarily because when I look at this chart, it's like, there's no way it could happen the same way again, but there's just a lot of things that are lining up right now that are extremely, hold on. Do I have the doubt? That's why I got the wrong chart, JWeb. Here, let me just pull.
God, come on. I step away for like 30 seconds.
I know. Don't leave me unsupervised. All right, there we go. All right, there we are. All right, this is the Dow. So I honestly was like, there's no way that 2008 is going to play out the same way again. However, all right, say this is November of 2021, and we play this out. Say this is the June low, right? And then say this is where we are currently. All right, somewhere around here currently. Right here is April of 2008. Right here is May of 2008. Right here is May of 2008 towards the end. And then at this bottom here is July, top at August, bottom at September. And it didn't necessarily bottom all the way until, January. Actually, no, that's March of 2009. So it did make a pretty good move over the course of that year. But I think that what we're seeing right now is very similar to the position we were in 2008 from, this rally where we see from here to there. Let's see what the percentage that is, and we can work that up with what we currently saw. Not necessarily a great rally. It's what, 11, 12%. However, if we look at where we currently are, we are, let's see, ruler. Let's say this is the bottom. And we rallied up to 16%, maybe even less. I think I did that wrong. Where's June, July, January? January is when we started to rally. It's 22. There we go. So from here to there, it's 5.56%. And we say that, May, July, June, July, that's when we start to see the turning point, the peak of that move. Maybe we do get a couple more percentage points to the upside. And that's where we see that, inflection point where everything turns bearish pretty fast. Again, I think that there's massive downside potential. And the higher that this builds, the greater this push to the downside is going to be. But it's just weird to see how a lot of things are, lining up. Again, not just time-wise, but also very similar patterns on the charts as well. Like, I can't wait to be here, a year from now in January and say, wow, that played out exactly how the fractal played out when we look at the charts back in 2008 and 2009. It just seems like there's a lot of things that are very similar to that recession. And, maybe this is the denial period where people are like, no, it's just a little bit of a pullback. We're in a bull market going into June, July of 2008. Clearly they weren't, but.
And people will be talking about you the same way they were talking about Michael Burry after 2008. So it's going to be amazing to see.
I would love that, except he's a much smarter man and definitely a more wealthier individual than I am. But,
for now.
That's true. He doesn't have any Dogecoin. He didn't have any on that pump.
Hey, Dogecoin, is this a good buying opportunity for Doge? I mean, we're back to 8 cents. Like,
oh yeah, well, considering we're going to fucking Pluto, that's gonna be, I don't know, $27 Doge. I'm saying conservative, but yeah. So that's what I got in the Dow Jones. Let's look at the DXY real quick before we pull up, consumer credit. Obviously, we were talking about this 102.035. We're currently above it, so we're finding some support on this line. That was my, not hypothesis, but that was what I was anticipating. It looks like the weekly closed already. It closed here. So, did the week close yesterday? I don't know. Maybe because of financial markets.
Friday. It might have. Yeah.
It usually closes Friday a little bit later, like 5 o'clock, 6 o'clock at night. It's got the weird schedule, but it looks like it's closed it says the market's open right now though. So it says 7 days and 4 hours until the next weekly close. But I'll just take this as we closed above the 102.035. We came down below it obviously today, but we're above it, 102.093. If we can hold the support and we can make the room to the upside, I'd like to still see the stochastic RSI come down a little bit more. I think there is some more room to the downside for some, negative price action. Do I think it's nearing a bottom? Absolutely. I think that we are going to be forming this double bottom pattern, and you can kind of see the formation. I mean, all you need is one push to the upside and just, obviously get it higher than, what is this? 105.287. I mean, if you got it above 105.696 over the course of a few weeks, that'd be absolutely bullish, and the dollar would be, taking off. So a lot of things right now that are really interesting. Obviously, unemployment, oil. You're going to get some CPI readings next week. All this plays into the strength of the dollar. People are just betting against it, or they're afraid and they're just running to the hills with as much cash as they possibly can. It's going to be really interesting to see. But right now, I'm not too scared or worried about the dollar. I still think that we are seeing this double bottom pattern. It's going to take time to play out. Obviously, we can't fast forward anything to get some green candles as much as I'd like. But yeah, that's the pattern I'm seeing form right now. Could it be something else? Absolutely. But I don't believe with the stochastic RSI being this low and, this much fear and all this data that we're getting, like 3.5% unemployment, that's got to go much higher. And obviously there's just too much, there's too much cash still in circulation. People are still spending a decent amount of money. So once that begins to slow down, I think that's when the dollar is going to be obviously showing its strength against the markets, both labor and, financial.
Okay. I did find the consumer credit release. Total outstanding debt is $4.82 trillion. That is up 15.3 billion from the. So this is February's number.
That's it.
This is a 2 month back thing. So January's data was 4.805 trillion. We're at 4.82 trillion.
Okay.
For total outstanding debt.
Not that much of an increase, but
yeah. I mean, it's still up. It was up, it went up every quarter in 2022. It's been up each of the last 3 months. It is not going down. It's, going to stay elevated as long as interest rates are high, because fun fact, if you weren't aware of this, when interest rates go up, your credit card percentage goes up as well if you carry that balance. Another reason to not carry a fucking credit card balance for all that's holy in this world. And it's going to stay that way because, I mean, let's just call it what it is. And I'm going to sound like an asshole here, but most people are so financially illiterate that they will never pay off their credit card all the way. They'll be carrying debt into their grave, and their kids are going to be carrying that debt on for them.
No, you don't tell like an asshole. Sometimes we're not in the business of telling people what they want to hear at JWeb. And if we were,
Yeah.
we'd be billionaires and taking advantage of everyone. We're not here to lick ass. We're gonna tell you, you're bleeding if you got shot. So point is, you are 100% right. People are absolutely, they either don't know or they're just, they're not concerned about it when they should be. And this is why we're in this point where, we increased the consumer credit debt, what, 15 billion? Like we're talking about billions here. This is what,
Yeah.
4 trillion. That's 4 times the market cap of Bitcoin at its all-time high.
Yeah. And like, I think a lot of it is people just don't care. Like, and this is part of the death of the middle class. When you hear that like the middle class is dying and it's either going to be, the poor or the wealthy, it's like, that's where that's part of the divide right there, is like the people who are in the middle class right now, who are actively trying to get their liabilities as low as possible and are trying to accumulate assets, are the ones who will move into the upper class as this gets worse and worse. And those who continue to live above their means and try to keep up with the Joneses and all the other idiots that they follow on social media because they only see the highlight reels of people's lives, those are going to be the one that is, when times get tough, if they lose their job, they're not going to be set up to withstand that. They will go into greater debt. They will end up moving more toward the lower class. And it just is what it is. And like, it sucks because people are going to get hurt, but you can't help everybody, especially. This is one thing I learned from over a decade as a personal trainer. You can't help everybody. You can only help those that want to be helped. And so that's what we're going to keep doing, is like putting out the information for those who want to, increase their wealth and try to come out of this whole thing on a better note. So that's what we're going to keep doing.
Yeah, I couldn't have put it better myself. I think we're not betting against the fall of the American economy. We just anticipate that, and we're going to, take advantage of the ride down. I think that's the way maybe we are betting against
it. And not even take advantage, just like we're going to do what we need to do to come out better from it, which is what any sane and reasonable person would do. Right. Unfortunately, most people aren't sane and aren't reasonable.
It's an opportunity to, even when things are at its worst, you can always make the best of a bad situation. And again, it's not really hard what we're doing. It's just accumulating cash, work, not being frivolous with how much money we have and spending it like insanely. And then it's, again, just being open to the fact that everyone else is wrong. I think it's a really hard mindset to have. It's psychology of trading, where it's like, well, everyone else is saying the opposite of what I think, so I'm going to go with everyone else because maybe I'm just wrong. It's like, no, maybe you're just early. And that's usually how it tends to play out. So again, is it hard being on like Twitter and seeing, or just looking at the charts and seeing the price shoot up? Absolutely. It's terrible. It's a terrible feeling. However, I know that this market is bullshit. I've said it since day one, and it's going to stay being bullshit till I'm right. I'm just kidding. But it's definitely
it's just having discipline, man. It's having discipline, having patience, having belief in your theory and your thesis. And if you have those things, eventually, probably, hopefully, it'll go right. But, and your thesis is not based around hopes and dreams. It's based around data, on a shorter time frame and a longer time frame. So there's a reason that we view things these ways, and, just do the best you can to put yourself in that position to succeed long term. That's the best that anybody can do right now.
Yeah, 100%.
All right. Anything else we want to touch on today, or are we good to wrap it? I feel like we've done everything we can at this point. Not as much to talk about, but it was a good conversation nonetheless.
Oh yeah, absolutely. It's been an extremely exciting employment data week. We got tons of stuff, maybe a little bit of a letdown since TradFi markets are closed today. But again, we got a whole nother week starting Monday. I'm excited to see what the Sunday night futures bring. And yeah, I think that right now, just, head down, focus, keep stacking that cash. I'm putting more cash into risk assets right now, ready to short. Obviously, I'm holding a little bit more Tether. I bought some more yesterday. So that's my play right now. I'm just waiting for the right opportunity to enter the market. But I think that there's tons of stuff that you could just do some research, do some reading, watch some 2008 financial videos, interviews with some of these people from back then. You're going to learn a lot, but I think it's just a good time to enjoy the weekend. Yes, Ace, enjoy the weekend, you and your family as well. Yeah, just take it easy this weekend. Don't stress out. It's a quiet weekend.
Nope. Enjoy whatever holiday you celebrate. If you celebrate a holiday, enjoy that one. There's a lot going on right now. Maybe you watch The Big Short. I don't know. Or maybe you watch something that puts you in a better mood. That's going to do it. We'll be back on Monday. Not a whole lot happening before we go live. Monday, wholesale inventories. Fed President Williams from New York, he will be speaking. We actually have, between Monday and Tuesday, 4 Fed presidents are going to be speaking. So that's going to be interesting to hear the different tones, how they're viewing things right now. I think we've heard from 2 of the more bearish ones in the last few days. And next week, maybe we hear a little bit more bullish sentiment from these Fed presidents. I'm not sure. And then as the week goes on, we got a lot of data coming in Wednesday, Thursday, and Friday. So it's going to be another exciting week. Stay safe out there. Stay patient. That is going to be your best bet long term. This market will absolutely crush those who are impatient. So markets are open on Monday. It's today that everything is closed for the holiday. So markets are open regular week next week. So let's rock and roll, baby. Have an awesome weekend, everybody. If you are still here and you haven't, hit the like button, subscribe, drop a comment, share us out to your friends. We really appreciate it. Maybe if you're, on your way to Easter service this Sunday, you toss Money Never Sleeps on the radio, from iTunes or from YouTube, let everyone listen to that and hear Kevin and I ramble on, and your family's like, wow, these guys are brilliant. That's what I'm expecting to have happen. So have a great weekend. Happy Easter, Passover, Ramadan. If I missed a holiday, I'm sorry, but have a great weekend, everybody. We'll be back on Monday.
Take care, everyone.